well, who's now joining in on the show. Deven, just give us a sense as to what exactly you make of this, because it was in the month of May that the creditors had approved this spin-off of Reliance Strategic Investment, which is Jio Financial Services, and it looks like now things are finally taking shape.
Good morning, Evan. Obviously, I think this is a news setting which is already in the market. They have already got the approval from creditors, as you rightly mentioned. And yesterday, or even on 20th of June, I guess I think the NCLT approved the scheme, for which I think yesterday the order must have come. So that is where the announcement has come. I believe that I think this is going to be definitely a good value addition as far as I think the Reliance Group shareholders are concerned, largely because of few facts. This company is starting with an underlying net worth of about 1,50,000 crores, out of which I think about 1,10,000 crore worth of shares of Reliance Industry that they would have, and balance I think in form of the real net worth that they have, which means that I think they would be starting in a very, very strong proposition compared to their peers in the marketplace. If Bajaj Finance is the largest retail NBFC today, I would say that I think about 44,000 crore is their net worth. Vis-a-vis that, I think the Jio Financial Services would have around close to 1,10,000 crore from share, then balance I think from the cash, so around 1,50,000 crore kind of a net worth they would have. So immediately they would have an advantage of having a higher amount of AUM going forward. Largely two areas where we see the kind of a growth coming in from them, or the strategy getting employed by them. One is merchant lending and second is retail lending. They already have a retail book of around close to 2,75,000, 2,80,000 crores on annualized basis at the end of last quarter, which I believe is growing at around 15% rate of growth. So close to 3 lakh crore worth of retail revenue book that they have got. On one side, the merchant lending, which could be, I think, easily around 25 to 50,000 crore per month kind of a requirement that they would have. And the balance amount would be, I think, from the retail lending, where the NIMs are significantly higher, given the subvention pricing mechanism that they have. So Reliance Jio, or the Jio Financial Services, remains, I think, a strong proposition as far as I think the outlook is concerned on NBFC side. And that definitely holds good for shareholders because they are getting 1:1 equity out of this particular proposition. So certainly, I think you are getting a relatively better visibility for your investment going forward from this particular company.
To break it for our viewers here, Deven bhai, for the current shareholders of Reliance, before the record date, the Jio Financial Service will come for free. You will get shares of Jio Financial in your demat after the record date.
That's right, absolutely. I think you are getting 1:1 share allotted against every share that you are holding for Reliance Industries.
My next question is that Reliance, up until now, has always created businesses and then they've listed them. Whether it has been there are RPL or talks of listing other businesses. In this case, they are giving birth to a business and they're giving you free share right at the birth. It is very unusual practice and unlike what the historical precedence has been.
Yeah, I think, but in financial services industries or the financial NBFC business, probably I think they couldn't have done it the way the other businesses got built up, particularly the manufacturing side of the business or industrial side of the business, even for that matter, consumer side of the business. Because in the NBFC business, I think you definitely require a separate entity to operate for. And as a result of which, I think this particular entity had to take a birth if they want to grow it further. Because I think, as I was explaining, on one side you have got the merchant lending taking place. If they do it from the same company, conflict of interest would arise. If they do it from the same company, I think the conflict of interest would arise for even retail also. And certainly they can't even tap the other areas, including I think the stock and the lending related to the shares, etc. They can't tap that particular business either because of the regulatory requirement of RBI on that front. So all in all put together, they had to give birth to a separate company with a sizable amount of net worth, so that I think the advantage that which otherwise they did not have earlier will now get materialized because of I think the ramping of the books at a much faster pace than otherwise. They probably have the market carry. That is fundamentally very important. On retail side of the business, they have got market carry. due to money control in their portfolio, they also have, I think, the list of investors already onto that particular portal. So they have market ready for approaching them for generating the business. Of course, it is not going to happen in one quarter, I agree. But at the same time, I think if you are planning for 2 or 3 year journey, you are likely to make a very significantly large size book. I may be exaggerating if at all. I think this number sounds big. I think it could be, I think, beyond 10 lakh crore worth of books that they may end up creating at the end of third year. So I think this is a really large proposition which is happening for investors of Reliance Industries.
Yes, indeed it is, and we'll have to watch out how Jio Financial Services as well disrupts that space. Thanks so much, Deven, for those details. Quick break.